press the bell icon on the YouTube app and never miss another update.
Yeah, all that we have been discussing till now has been with respect to the primary market. But as we are aware, capital markets are divided into two segments, primary segment and the secondary segment. Many a times popularly referred as the primary market and the secondary market. So let's discuss now with respect to the secondary market. See, in primary market, new securities are created. Now, let us say a company is coming up with a public offer of shares or initial public offer, and let's say you are applying for the shares, and then shares are getting allotted in your name, right? But please understand, when you are applying for shares, you're applying for the equity share capital. Now, equity share capital is considered to be a permanent source of capital. So whatever money you have contributed to the company, that money will now never be returned back to you. Right? After all, equity share capital is a permanent source of capital. So if you are applying for the shares and shares are allotted to you, and let's say you are investing, let's say 2 lakhs of rupees, that 2 lakhs of rupees is gone forever. Unless and until the company goes into liquidation or the company plans a buyback of shares, that money will never be returned back to you. Now, today I am investing in shares, but let us say after a few months or after a few years, I am in need of money. The company will not refund the equity share capital. That is the reason we require a secondary market. Every company that issues shares will get the shares listed in the secondary market. So secondary market is nothing but the stock exchanges, right? Every day, millions and millions of people are buying and selling shares on the stock markets all over the world. So secondary market is a segment which will provide liquidity to the securities created in the primary market. I hope you get my point. What we are saying is that secondary market, it offers liquidity. This is necessary. I apply for shares of a company and that company will never return the money back to me, then I'm not interested. Because once I invest in that shares, and if I will, obviously a time will come when I will like to get the share back. A company is doing a business. A business is a going concern. It will last forever and ever. But I am an investor. I am a human being. I will not last forever and ever. So I will need money from time to time. And that money will not be available in the primary market. Primary market creates the security, and secondary market offers liquidity to those securities. So we say it offers liquidity to securities created in primary market. So if the security created is, let us say, equity shares, then equity shares will be listed in the secondary market. That's the reason I was saying that secondary market is nothing but the stock exchanges, right? It can even be a commodity exchange, but we are limiting ourselves to the stock exchanges as far as this episode is considered. So secondary market is offering not just liquidity. Stock exchanges also offer price discovery. Understand this. When a company plans a public offer of shares, the book building process results into the price discovery in the primary market. After that, the share will get listed on a stock exchange. The forces of demand and supply on the stock exchange will further result into the price discovery of the security. If the company is doing extremely well and is expected to do well in future, demand for that share will be higher. More and more people want to buy that company's share because they want to participate in the growth story of that company. But very fewer people are ready to sell the share. So demand is high, supply is less, the share price on the stock exchange will rise. Or it can even be the other way around. The future prospects of the company are not good. So existing investors want to exit the share, they want to sell the share. But because the company is not expected to do well in future, there are fewer buyers. So supply will be higher, demand will be lower, the share price will fall. So forces of demand and supply on the stock market, or rather I will say in the secondary market, will now result into further price discovery for the securities which have been created in the primary market. So when you think about secondary market, think about the stock exchanges. Now, tell me, what do you say? Which are the popular stock exchanges in India? When we talk about stock exchanges now, which are the popular ones? We say stock exchanges in India. India is a huge country. Let me tell you, there are large number of stock exchanges in India, but we are talking about the most popular stock exchanges. There are two extremely popular stock exchanges in India. Which are they? They are BSE and NSE, right? These are the two extremely popular stock exchanges. BSE is the Bombay Stock Exchange and NSE is the National Stock Exchange. Bombay Stock Exchange obviously is in Bombay, or let us say Mumbai. Where is the National Stock Exchange? What do you say? Any idea? Bombay Stock Exchange is in Bombay, obviously. If they're saying Bombay Stock Exchange, it has to be in Bombay. Where exactly is the National Stock Exchange located? I'm in the head office. Where is it really located? The National Stock Exchange. Please understand, National Stock Exchange is also located in Mumbai. Many a times we have this feeling that national, something which is national, it has to be in the national capital, which is in Delhi, but that is not so. Bombay Stock Exchange as well as National Stock Exchange, both are located in Mumbai. This is the reason we keep on saying that Mumbai is the financial capital of India. Why do we use this term, that it's the financial capital? Because two extremely popular stock exchanges of India, where every day crores and crores of rupees of turnover is taking place in case of shares, in case of derivatives, both of the prominent stock exchanges are located in the same city. And that's the reason we call Mumbai as the financial capital of our country. Anyways, these are the two popular stock exchanges, right? If you are buying shares, if you are selling shares, most probably you will be doing it either on BSE or on NSE. As I said, even there are different stock exchanges also. Almost every major city of our country can boast about having a stock exchange, because that was the old way of trading. Now what has happened is, because of use of technology, you are now connected with a network of computers and satellite. So whether you are in Mumbai, whether you are in Vadodara, whether you are in Ahmedabad, whether you are in Patna, whether you are down in south, let us say in Bengaluru or in Chennai, it really makes not much difference, because you are connected to a particular stock exchange via a network of computers and the satellite. So earlier the case was that we did not have this technology. So a company had to get listed on multiple stock exchanges. For example, if a company is listed only on Bombay Stock Exchange, but I am, let us say, in some town in Rajasthan, and I want to buy and sell shares. Let's say I'm in Jaipur, let's say I'm in Udaipur, and I want to buy or sell shares. Now, this share is listed only on Bombay Stock Exchange. It will be that much difficult for me to do trading in that particular share. So what happens is, you are having a stock exchange, let us say in Jaipur also. You have a stock exchange, let's say in Vadodara also, in Ahmedabad also, and the share is listed on BSE. The share is listed even on Vadodara Stock Exchange, even on Ahmedabad Stock Exchange, even on Delhi Stock Exchange. So if a company is listed on multiple stock exchanges, it offers liquidity of that particular share to people who are living in that city and also to people who are living around that particular city. But now, because new technology is available, we do not require such a large number of stock exchanges. So all these stock exchanges, other than BSE, other than NSE, I'll be very honest, they are really struggling to survive. So we are basically having a situation right now where we have two major stock exchanges in India, right? Even between BSE and NSE, let me tell you, although Bombay Stock Exchange is highly popular, no doubt about that, it is the oldest stock exchange of India, perhaps the oldest stock exchange of Asia also. I'm not too very sure, but it is definitely the oldest stock exchange of India. So BSE is very popular. But when you look into the turnover, okay, when you check with the turnover on NSE is higher than the Bombay Stock Exchange. So the number one stock exchange right now in India, as far as the turnover is considered, is the National Stock Exchange. Then the second place, it is the Bombay Stock Exchange. So two popular stock exchanges. If you are buying shares or selling shares, perhaps you will be either trading on National Stock Exchange or you might be trading on the Bombay Stock Exchange. As I was saying, these stock exchanges are connected through computers via satellites. So now let's say I'm in Vadodara, right? And I want to do a trade on National Stock Exchange. Then I don't have to visit Mumbai, or I don't have to locate a broker who is registered with National Stock Exchange or registered with Bombay Stock Exchange. I, sitting in Vadodara, can execute a buying deal or a selling deal sitting in the comfort of my home. I have to simply call up my broker. That's it. And when I say broker, not a broker necessarily in Mumbai. Even a local broker can provide me the services. Why? That's what I was saying. All the trading mechanism is now online. It's happening in real time now, thanks to the technology, thanks to the satellites which are connecting all the computers together. And that is how collectively the entire mechanism is working. So during the trading hours of the stock exchange, I can very easily buy shares. I can very easily sell shares, as I said, without visiting even my broker's office. As I said, if I have good relations with my broker, I will simply call up my broker and I'll be able to buy and sell shares. If you are tax savvy, you can sit in the comfort of your home and you can execute buying and selling deals simply by sitting in front of your own computer. So this is what they are offering. Bombay Stock Exchange as well as National Stock Exchange, they offer what I will call as ringless screen-based trading. Yes, this is what they are offering now. Ringless and screen-based trading. By screen, I mean the computer screen over here, isn't it? You visit any broker now, you will see a large number of computers lying there, a large number of people operating those computers. They are constantly in touch with their investors, with their clients, and they are continuously buying and selling shares. They are executing different kinds of orders on the stock exchange. So BSC, NSC, they have their own software. Using that, we are buying and selling shares. So you are simply sitting in front of a computer. That's the reason we are calling it as screen-based trading. Yes, they also use the word ringless. What do you mean by ringless over here? Okay, we are talking about the word ring over here. By ring, I don't mean the ring that you are wearing in your fingers, right? We are not talking about that ring. By ring over here, try to visualize a huge hall. Okay, try to visualize a huge hall, which we are referring as the ring. Have you watched any WWE matches, wrestling matches? Have you ever watched any one of them? Right? There's a huge hall, large number of people are sitting in it. That's what we call as a ring. So that was the similar system which was there in the earlier days. You visit any stock exchange, right? I am in Vadodara. So if I am visiting Vadodara stock exchange, or you may be in any other city, if your city has a stock exchange, just visit that particular stock exchange. You will see over there a huge hall, right? A huge hall, which we are referring as the ring. In the earlier days, in that huge hall, the brokers will assemble. For example, let us say I want to buy shares of Reliance. So I will tell my broker that please buy 100 shares of Reliance for me. Okay. Similarly, there might be someone else who wants to sell 100 shares of Reliance. So just try to visualize I have contacted my broker while the other party has contacted his or her broker. These two brokers and also a large number of other brokers, they will assemble in this huge hall. And in this huge hall, they will now negotiate for buying and selling of the shares. As I said, stock exchange has to offer a price discovery. So it is these brokers that are negotiating with each other. So just imagine a huge hall. Just imagine it is occupied by a large number of brokers. And you know what? These brokers will be shouting at the top of their voice that these are the shares that they want to buy, these are the shares that they want to sell. Right? It's a very noisy affair. That's what we can really say over here. Of course, they have developed different thumb signs and finger signs also, so that in all the noise which is there in the ring, we are able to identify, or rather, I'll say one broker will be able to identify another broker who has an opposite requirement. Opposite requirement. I want to buy shares of Reliance, but when can I do? Only if there is some another person who is ready to sell the shares of Reliance, isn't it? So in that particular ring, I will have to identify another broker who is ready to sell the shares. So I want to buy shares of a particular company. Another broker is representing another client who wants to sell the shares. And then negotiations will take place between the brokers. And finally, the final price will be decided. So this is how the trading was done in those old days. And that's the reason every stock exchange had this huge hall. But the moment new technology was available, the ring has now got replaced by a network of computers, isn't it? I want to buy shares. I tell my broker I want to buy shares. The broker will enter the order in the software that 100 shares of Reliance are to be purchased. Similarly, if there is someone else who want to sell shares, that person will tell the broker will enter the details that okay, 100 shares of Reliance are to be sold. The software itself will match the buying and the selling, and in fraction of seconds, the entire deal will be executed. So that's how deals happen nowadays. But earlier days, it used to happen with that huge hall. Now that huge hall is no longer required. Now that ring is no longer required. And that's the reason we call it as ringless screen-based trading. That's the platform which is now offered by National Stock Exchange as well as Bombay Stock Exchange. Between BSC and NSC, National Stock Exchange was, what we can say, able to offer this much earlier than Bombay Stock Exchange. So National Stock Exchange had the first movers advantage. Also for a simple reason that there are fewer number of shares compared to BSE which are listed on NSE. Bombay Stock Exchange is far more ahead in terms of the number of shares which are listed on it. So NSE became, what we can say, NSE was earlier than BSE to offer this particular system of trading. And that is the reason. Even today also we see that that advantage is continued. The National Stock Exchange has turnovers which are turning out to be higher than the Bombay Stock Exchange. So this is the new way in which you will be able to trade. Because they are using software now, yes, as an investor, for you and me, it has become very simple now to buy and sell shares. There are different types of orders that we are able to place before our broker. I'll discuss a little bit even with respect to the same. Let us consider some hypothetical company. Let us say the company is XYZ. Let us say its market price right now, market price per share, let us say is 700 rupees right now. We're taking a hypothetical example. So here is a company whose share is trading right now at 700. Let us say I want to buy shares of this company, but I don't want to buy share at 700 right now. I want to buy the share if the share price falls to 680. So if today, let's say the share price falls to 680, then I'm interested in buying the share. I can place this kind of an order before my broker. I can tell my broker that, see, the share price right now is 700, but I want the share at 680. The broker is in a position to enter this kind of an order. By chance, if during the day the share price falls, let's say the share price falls and actually reaches a level of 680, then the order will get executed. And because the order will get executed, I am able to buy the share, right? Similarly, let's say you want to sell the share. I call up my broker. My broker says that right now the share is trading at 700, but I want to sell my share, let us say at 712. Let's say. So I can tell my broker that I want to sell the share at 712. By chance, if during the day the share price rises and really reaches the level of 712, my order will get executed. So you can understand this. See, the trading hours of the stock exchange and our office hours are exactly the same, or more or less it's going to be the same, right? Of course, the stock markets close much, much earlier than our office hours. But what is the case? Let us say I've invested in some share. And once I reach my office, right, once I reach a company, now I will not really be allowed in a company that I have one window open on the side, where I'm buying and selling shares. Obviously, this is not going to be allowed. And that's the reason these kinds of orders, if I'm able to place before my broker, I will get a better deal. Otherwise, I'll have to constantly monitor the stock markets. For example, I want to sell the share at a price which is above 700. I want to sell it at 712. I'll have to constantly monitor the stock markets. The moment the market rises, the share reaches 712, I'll have to immediately call up my broker, tell my broker that, see, I want to sell the share. Instead of that, what I can do is just before reaching the office, I tell my broker that, see, at 712, I'm interested in selling the share. And then I'm in my office. As I said, once you are in the office, the stock market sites, websites will be basically blocked for you. Oh, yes. By chance, if the share price rises to 712, your order will get executed. This is what we really want to do. So these kinds of orders can be placed by us. Another extremely popular order that can be placed is a stop loss order, right? I can also place what is known as a stop loss order. This is also something that I can do. For example, let us say I want to buy shares. Let's put it in this way, that the market price right now, let's take that same example. Let us say it is 700 right now, but I want to buy share at 680. So I tell my broker that please buy the share at 680 rupees. Then, as I said, I'm going to my office. Now I just don't know what is happening on the stock market. My office hours get completed. I call up my broker. I ask my broker, were you able to buy the share at 680? My broker says, yes, we have purchased the shares at 680. And then you ask the share, right? You have been able to buy the share at 680. And then you ask the broker that what was the share price at the closing time? When the markets closed, what was the share price? And your broker now drops the bomb. The broker says that now the share is trading at 600. It's trading at 600, right? The share price, which was 700 when you were just entering your office, it has collapsed. It has fallen to 600. Tell me, you have been able to buy shares at 680. Should I be happy about it that I have been able to buy at 680? Because you purchased the share at 680, because the share price started falling from 700, it reached 680, and your order got executed and you have been able to buy the share. But by the time the day came to an end, the share price has closed down to 600 rupees. Don't you feel you are now sitting on a loss of 80 rupees per share? Right. That's where a stop loss order will come to your help. Okay. I will tell my broker that you buy the share for 680, and I will also tell my broker that please stop the loss at 670. Let's see. What will happen now? The share price right now is 700. It falls down to 680. So the share is now purchased. And let's assume it also reaches a level of 670. Your same share will get sold. You will, yes, book a loss of 10 rupees per share, agreed. But in the earlier case, you were booking a loss of 80 rupees. You were sitting on a loss of 80. Now you are having a loss, but only of 10 rupees. So, even this kind of a loss can be, even this kind of an order can be placed by us. I'm just giving you a glimpse of what can be done thanks to the use of the software. There are a lot many other things that can also be done. There are different types of orders that you are in a position to place.
Press the bell icon on the YouTube app and never miss another update.